Hello and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. And don't forget that today is Friday and we got you Buy Now, Sell Now Pathshala with Kunal Bothra. So we will have a look at that. But before that, let's have a look at what the markets are up to. So Cheryl, once again, a green on the bank Nifty, but the benchmark indices, that is Nifty 50, drifting in red.
Absolutely. A very good morning to you, Shrishti, and clearly you're very happy that it's Friday, because when you when you actually introduced the show, when the word Friday came out much louder than the rest of the introduction for the markets. But yes, like Shrishti said, Nifty Bank is in the positive territory. It has actually recovered a tad bit from the day's lowest point, that is Nifty Bank for you, as you can see, heading towards the day's highest point right now. Benchmark indices, however, are subdued in today's trading session at one point in time, or rather right now also you have Nifty that is trading below 19,300 mark. If you look at Sensex, 300 points cut coming in for Sensex, and yes, the advanced decline ratio as of now is tad bit tilted towards the decline. So yes, we may see some sort of volatility through the course of the day. As you can see, broader markets also lost steam with mid-cap index at the day's lowest point. Talking about the list of gainers, then you have Adani Ports as ruling the charts with 1% gain. Aisha, Axis Bank and L&T are some of the gainers in trade. Apart from Adani Ports, none of the other Nifty gainers are seeing gains upwards of 1%. If you look at the list of losers, then it is the tech stock that is under pressure in trade today, with Wipro being the top loser on the Nifty, 2% downtick coming in for Wipro. You have TCS that's seeing downtick of 1.8%, ditto coming in for Coal India. Tech Mahindra, Hero MotoCorp and Infosys are the other set of losers in trade today. So suffice to say that Nifty IT index is definitely the top sectoral loser in trade, 1.7% downtick coming in for Nifty IT index. You have Realty, Metals also seeing some pressure in today's trading session. But on the gaining front is the power index that's powering ahead. The BSE power index is seeing gains of about 0.8%. And you have also the PSU banks that are holding 0.3% uptick coming in for Nifty PSU banks. So that's the way how the markets are looking like at this point in time. Shrishti, like you mentioned, benchmark indices under pressure, Nifty Bank outperforming.
Well, yes, absolutely. So let's see how the second half pans out to be. But with this, let's go on to Kunal Bothra then. He's joining us live in the studios for Buy Now, Sell Now Pathshala. Very good morning to you, Kunal. Today, what we can read on the screen is importance of 50 DMA. We have been taught about the 200-day moving average. So what's the difference between the two, and for what time period one should be looking at this?
Well, yes, Shrishti. So, 200-day moving average was something which we discussed, in the previous session for Pathshala, and there we had mentioned that 200 DMA is more to do with long-term trends, trying to identify stocks which are trading on a start of a fresh uptrend, as well as a point where the stock goes into a start of a fresh correction or a major downtrend on the longer term charts. 50 DMA is something which is more restricted towards the time frame, and here we try to call out stocks which are going through a medium term correction, and so we tend to highlight stocks which becomes buy on dips, or go back towards the theme of buying stocks on corrections. 50 DMA is a classical indicator or a moving average which helps us to do that. So I've highlighted two important charts over here for 50-day moving average. One is the charts for Grasim. This is a very recent chart for the stock price. This red line which you can see is the 50-day moving average for Grasim. And again, a point where when the stock breaks below this 50-day moving average, you see that there's been minor rallies towards the stock trying to come back to the 50-day moving average, but it acts as a resistance. On the way up, which means on a start of an uptrend, whenever the stock goes into a correction, 50 DMA somehow has been acting as a major support. So the corrections leading towards a 50-day moving average, they generally tend to get halted. The stock consolidates for a few more trading sessions, and then you see an upsurge or a rally coming back. So this is the classical case which has happened for Grasim over the last many months, where the stock comes closer to this 50-day moving average, maybe a couple of days of close just around the 50-day moving average, and then the stock sees a bounce. We've seen a very similar kind of a price action so far over the last 1 week for Grasim, and the stock has come back again to that 50-day moving average. So which means that an idealistic behavior which is being repeated over here is that the stock tries to go into an uptrend, gets into a correction, those minor corrections halt at the 50-day moving average. I've taken one more example, and a stock which has been in the thick of news flow, which was M&M. And as you can see that the stock, post in fact in the last 3 or 4 months had rallied up, broken past of above 50-day moving average, started a medium-term uptrend. There was this recent news flow for M&M, and the stock had opened with a gap down. Again, that gap down or that selling pressure halted closer to this 50-day moving average. The stock has protected this level at 1450 mark, and we've seen the stock now coming back to that previous all-time high levels for M&M. So these are classical ways of trying to indicate stocks which come back to their medium-term support, helps us to find stocks which come back as an accumulative point or a re-entry zone. And the most important point is that the 50-day moving average helps to understand zones where markets absorb short-term corrections.
All right, so that's the importance of 50 DMA. Thank you so much for that, Kunal, and that's something new that you learned in today's edition of Pathshala. But for now, viewers, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll start taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that will be flashing on your screen right now. Do remember to mention your name, the stock that you're looking to invest in. If you're already invested in the stock, mention the buy price as well as the quantity. In that way, our experts will be able to help you better. And with that, let me kickstart with the queries then. And the first query that I have is coming in from Malika. She's writing to us from Mumbai. She's a long-term investor. Actually, beg your pardon. This one is for you, Avinash. She has 900 shares of Everest Canto. She purchased it at an average price of 97 rupees per share. 300 shares of Devyani International. She purchased it at around 160 rupees per share. She wants to know whether it makes sense for her to hold both of these counters in a portfolio or book profits in them.
Yeah, I think good morning, Cheryl. I think as far as Devyani International is concerned, I think the quarter one has been a little softer quarter for them. But I think the management commentary has been quite encouraging and quite confident. Our sense is that, in the QSR space, Devyani International has a very good exposure in terms of their geographical reach. And I think it is headed by the Varun Beverages Group. So I think the parentage is also equally strong. And if the investor has a time frame of at least 12 to 18 months, I think we are pretty confident that the QSR space will see a strong bounce back and obviously will benefit Devyani International. So from my side, it's a hold. Typically, the time frame should be at least 12 to 18 months. As far as Everest Canto is concerned, it is one of those companies which is into CNG cylinders. And I think the company had a very disappointing performance for the last couple of quarters. The stock has bounced back, from lows of almost 65 to 70 rupees to now 110 odd rupees. We believe that, going forward, most of the teething troubles in terms of the demand issues, in terms of the ramping up issues have got sorted out. So I think, the investor can wait here for another 6 to 12 months. We believe that obviously FY24 should be a lot better for them. And I think it's a hold from my side, provided, the investor has a time frame of at least, 8 to 12 months from now on.
Actually, I missed introducing our guests for today. We have Kunal Bothra as well as Avinash Gorakhshekhar. Once again, good morning to both of you all. Somehow, I thought I introduced both of you all, but yes, good morning, Avinash. Srishti, you can take over.
Yes, moving on to the next query then. And Kunal, the next query is from Geeta from Dubai, and she wants to know, is this a good time to enter MTAR technology? Why she's asking? Because she's already been holding shares of HCL Tech for a couple of years now and wants to make a shift from HCL Tech to MTAR technology. So will that be a good idea?
I think so. I think the stock looks fairly attractive. It's done reasonably well in the last 12 odd months. It's recovered from 1400 to 2200. It's not yet broken past about the previous highs. For the stock, I think 2400, 500 was the high for MTAR Tech. So the stock has not broken past about those levels. But then the recovery in the last 12 odd months indicates that there should be more trend ahead for the stock price on the upside. So I would suggest a buy, and I think the stock would probably break past about the 2400 mark, 2450 mark, possibly in the next 2 to 3 months, assuming this trend continues for MTAR Tech.
All right, the next one is coming in from Samrat. He's writing to us from Guwahati, and this one is on the newly listed counter as early as this week, Avinash. It's on SBFC Finance. He wants to know whether what should he do with this particular counter. He's already has it in his portfolio at 90 rupees per share. And that, I believe, is among the day's highest point what the stock had reached at the time of listing. What's your take on this one? Have you covered SBFC by any chance?
Yeah, I think, Cheryl, SBFC is a leading non-banking finance company, largely operating in the MSME space. They enjoy a pan-India presence, and I think the best part is, it is headed by a very prominent management team. Ex City bankers, ex HDFC Securities kind of executives who have come on board. Our sense is that the MSME space offers a very strong growth opportunity. The IPO price was at 57 rupees. The stock got listed at around 88 to 90 rupees. So I think, if the investor has a couple of years in mind, he can definitely hope to expect a decent risk reward here. I think we need to get better, more numbers from the company's, financials, from the company's corporate commentary going forward. And once that happens, you're going to see a positive traction coming in the stock because the tailwinds in this sector are quite promising. So I think I would suggest him a hold, but keep a time frame of at least 12 to 18.
Okay, moving on to the next one, and this one is from R. Dubey from London, and he has penned down his disappointment for not taking his queries in the past. So apologies, but because of the heavy flow of the queries, we don't end up to taking all the queries then, but taking it now. And Kunal, this query is for you. He wants you to help him out in investing 5 lakhs in 5 aggressive stocks for the next 6 months.
Wow, tough one. So aggressive. The point is not about 5 stocks, but the point is at this kind of a market where I would believe that the risk is more high than the reward because of the way the markets have shaped up in the last 2-3 weeks. But I would still believe that there are a few names which are actually looking attractive on the charts and which could probably make a strong comeback. Manappuram Finance is something which I believe looks fairly attractive. You can look to buy the stock even at current levels. My sense is that the stock is going through a big turnaround mode, which we would probably recognize maybe over the next 1 or 2 months. I think Bharat Forge at 950, 955 odd mark where it's trading right now looks fairly attractive. Ultratech Cement is I think at 8,200 mark. Not a very, very aggressive kind of a stock, but then the chart setup for the stock is looking very attractive. It says that with the market setup being a bit more cautious as such, I would probably stick to those moderate beta names, not the high beta stocks. So these are the 3 names which comes on the top of the mind from the list of 5 stocks which you're looking out for.
All right, this next one also is coming your way, Kunal, because you have Rajendra K, who's writing to us from Bangalore. He wants to know whether he can buy Bector Foods and Bikaji or any other stock in that particular segment for a time period of about 9 to 12 months. He wants to know, is it a right price to buy Bector Foods now, given the fact that it's already seen a spectacular rally? You think this is a level that you can enter?
I don't think so, frankly, because I think if you've been holding on to the stock earlier, then the recommendation would have been to maybe book partial profits and then look to buy the stock on corrections. I think at 1100 odd mark, buying the stock would probably be a very skewed kind of risk reward. I would not suggest to go for it. In case if the stock goes into a correction, maybe a 10% or a 15% correction, at least that's a good starting point for you, especially from a longer term play. For Bikaji, I think that could probably be a buy because I think the stock has already gone through a price-wise as well as the time-wise correction in the last 1 month. The previous highs was around 520 odd for Bikaji. The stock had corrected towards 470 odd mark, which means a 10% correction has already taken place for the stock. And in the last 1 month, it's also gone through a time-wise correction. So I think that could be a better buy at current levels.
Okay, moving on, and Avinash, this next query is from Rajesh Maheshwari. He's from Indore, and he wants to know about Anupam Rasayan. What are the short to medium term prospects for this particular counter, and whether it makes sense to enter at this point in time, and any other stock from the chemical space which is looking attractive to you currently?
No, I think, Shrishti, from the chemical, especially the specialty chemical space, we believe that, the headwinds in the sector are quite strong. Most of the specialty chemical companies, including Anupam Rasayan, if we see the numbers, Q1 for FY24 has been quite disappointing. And I think this is largely because of the fact that demand has contracted. There has been a lot of commodity raw material cost push pressure. So I think, at this point of time, I would suggest that it's better to wait for at least a couple of quarters before one makes a fresh entry into Anupam Rasayan. As far as the other chemical companies are concerned, I would believe that it's better to wait for a couple of quarters because this space has become interesting in terms of valuations, but in terms of growth, I would believe maybe another one or two painful quarters are still awaited. And after that, one could definitely cherry pick and go forward. But I think within that, Gujarat Fluorochemicals and Navin Fluoro definitely look interesting, but at lower levels.
This one is coming in from Ketan Vasant. He's writing to us from Mumbai. Kunal, 800 shares of EKI. He purchased this at 1,559 rupees per share. He's saying that the stock has only been going one way, and that is downwards. He wants to know how long will the stock take to recover, and should he actually continue to hold on to this counter now?
Well, I think just about, last session as well, we discussed that how that if the stock breaks below the 200-day moving average and the 50-day moving average, you should try and consider exiting the stocks. EK has already gone through significantly below its long-term averages. In fact, at current levels of 450, the stock is significantly below its long-term, the medium-term moving averages. And I don't see any reason why you should just hold on to the stock in the hope and expectation of a rally. Let the rally play out, let the stock show some signs of recovery or break past about the 200-day moving average or the 50-day moving average. That could be a point where you may look to re-enter, but then just spending time and hoping that the stock may get into any kind of a rally, I think that's not a prudent strategy. So I would suggest an exit.
Okay, moving on, and Avinash, the next question is from Guru, and he wants to know about Coromandel Engineering Company. He wants to know, can he buy this counter at this point in time? We don't talk about this particular company because it's a small cap, but is this under your coverage?
I'm sorry, Shrishti, I don't cover this one.
Okay, no worries then. But taking the next query, this one is from Poonam from Gurgaon, and Avinash, she's looking out for advice on two counters. Firstly is Jindal World. She bought these shares at a price of 332, as well as Arvind at a price of 143 rupees. So what to do in both of these names?
Both of them are textile players. In fact, as far as Arvind is concerned, they should benefit because of lower cotton yarn prices. And I think they are a large exporter of finished garments as well as, value-added kind of fabrics. So I think that is definitely going to benefit Arvind in the coming 12 months. Our sense is that the fall in the yarn prices has been significant, and this benefit could get reflected both in margins as absolute profits in the coming year. As far as Jindal World is concerned, they have now decided to diversify into electronic technology, specifically drones, and which looks quite interesting. But I think it's an unrelated diversification. As far as their core business of denim is concerned, it's doing pretty well. So I would believe that in both these stocks, it's better to take a kind of a hold decision for the next 12 to 18 months. My sense is Arvind would do a lot better as compared to Jindal Worldwide.
The next one that I have is coming in from Mahesh. He's writing to us from New Delhi, and this one is also for you, Avinash. He wants to know your view on Divi's Laboratories. He's intending to buy this counter for the medium to long term. Do you think right now he should look at Divi's Laboratories? Do you think that the selling pressure that this particular counter saw on back of his earnings is over? You see a road to recovery for Divi's Laboratories from here on?
Yeah, I think, most of the negatives are built into the price, but I think in terms of the earnings recovery, one could expect some recovery only from the second half of financial year FY24. And I think the management is pretty hopeful that, the overseas markets and especially markets for contract research would get scaled up significantly in the second part of the financial year. So I think if he has a 2-year horizon, he could definitely do a small SIP at the current level, and obviously take a time frame of at least 12 to 18 months.
Coming in on DVs, but with this, viewers, it's time to slip into a short break. But don't go anywhere, we'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries. So let's continue taking your queries then. This one is coming from Jacob Philip. He's writing to us from Kerala. He wants to know, he actually wants to invest some amount in Muthoot Finance. He wants to know, is it the right time? He's not told us his time horizon for this particular investment. But Kunal, on the charts, do you think right now makes sense to invest in Muthoot Finance and hopefully make some good healthy gains in the short to medium term?
So I think Muthoot Finance and Manappuram Finance, both of them are looking very attractive on the charts. Now, there's a very thin line of distinction between these two charts, and on a short-term basis, on a relative basis, one of the stocks could outperform. For example, Muthoot Finance formed a bottom first, rallied up higher, but then Manappuram Finance has taken the baton from there and is now catching up to the underperformance. And Muthoot Finance has gone through a correction. Manappuram Finance has yet not gotten to a major correction as such, except for today's price action. But then when I look at the charts, it's more or less in sync. I believe that probably the charts for Manappuram Finance is a lot more better, given the kind of recovery the stock has shown, the volume patterns as well as the indicator patterns which we typically look out for. So You can go for Muthoot Finance, but I would probably even suggest that you can add maybe some bits of Manappuram Finance as a good diversification.
Okay, moving on, and Kunal, once again coming to you, this query is from Dr. Sirin from Bangalore, and he's holding shares of D-Mart, 50 shares at a price of 3,551 rupees. So at this point in time, is that a hold or sell?
See, I would suggest a hold as of now, but the chart patterns are not very exciting for DMart. As I was pointing out earlier, that the stock is currently below the 200-day moving average. Now, the only attractive point is your buy price, which is at a reasonably low level as compared to the previous swing highs for DMart. That would probably make the possibility of a bounce sustainable for DMart. So the 200 DMA, I think at current levels is at 3,700 mark. So you can play for that kind of a short-term target for DMart.
Okay, this next one is coming from Prasanjit. He's writing to us from Kharagpur, West Bengal. This one is for you, Avinash. He has Kotak Mahindra Bank, 50 shares of this particular counter at a price of 1,850 rupees per share. He wants to know, for the long term, Kotak Mahindra Bank is a thumbs up from your end, or should he try to look to diversify his holding then?
I think from a longer term perspective, I think Kotak Bank should be held on as a portfolio stock. I think the stock has underperformed other private sector banks, but that doesn't mean that the bank has not been doing well. In fact, Q1 FY24 has been pretty impressive. Asset quality, loan book growth, and the bank's commentary has also been quite encouraging. So I think the investor needs to give in some more time, but I'm quite sure that the stock has the potential to bounce back, considering the fact that credit growth in the system is pretty strong. And I think that would help Kotak Bank to increase its balance sheet size, and obviously the kind of fee-based activities it does, it's also going to aid the bank going forward. So it's a hold from my side, but keep a time frame of at least another 12 to 18 months.
Okay, Kunal, the next query is from OSN Reddy from Hyderabad, and he is holding shares of HDFC Life from a price of 537 rupees. Currently at a profit in this one, so he wants to know what to do next. Can he make a switch from HDFC Life to HDFC Bank rather at this point in time?
Well, it could be a tough one because I think both the charts to me are looking very attractive on the long-term basis. HDFC Life is also an emerging breakout candidate. The stock has done reasonably well, in fact, exceptionally well. In the last 4 months from, I think, sub 500 levels to a point when the stock was in touching distance of breaking that 700 mark. So the recovery for HDFC Life is quite interesting. The stock has gone through a classical 10% plus correction from those 700 odd levels, which means that it's come back in attractive territory. Same is the case with HDFC Bank. The stock has also corrected from 1740 to I think 1600 or sub 1600 where the stock is trading right now, which means almost a 10% correction for HDFC Bank. So frankly, both the stocks are positioned very well. I would believe that it's better that you allocate 50-50 capital on both of the stocks rather than just choosing one of them.
Okay, this one is coming in from Rajesh. He's writing to us from Punjab. He wants to know that after recent fall, is L&T Finance Holdings a good candidate to continue to stay put with, because he's holding it at a price of 88 rupees per share. He has about 2,400 shares. He wants to know whether he should stay put with this one or look to exit and try to book profits. He wants both technical as well as fundamental take, but I will take your take on this one, Kunal.
So I believe that you should continue to hold on to L&T Finance. So don't look at it as a point that only this stock has corrected. In fact, most of these housing finance names or NBFC stocks, these stocks have corrected. Look at Chola Finance, look at M&M Finance, L&T Finance. Most of these stocks have gone through a more than a 10% to 15% correction in the last 3 to 4 weeks. So it's a sector correction which has happened. Now it's very difficult to call in that when would these stocks bottom out. But then on the charts, I think L&T Finance is coming into an oversold territory, which means possibly in the next 1 week, I would expect the stock to bottom out and then start showing signs of a rally. So as of now, you can hold, and maybe on bounce or a decent rally, you can look to maybe exit or book profits.
Okay, Avinash, the next query is from Ayush, and he has mentioned a list of stocks in which he is actually having more than 50% of the profits, and he is now looking to invest more in these names. He has Tube Investments, Finolex Cables, Godavari Power, Indian Hotels, as well as CIE India Automotive. These 5 shares are in his portfolio, good gains, and amongst them, in which one he can invest more?
I think broadly, all these companies which he has purchased are good companies, but I think typically CI Automotive is one company which, is an MNC company, and where I think the automotive component business is doing pretty well. So, around 450, 460 odd levels, if he at all gets, these kind of price levels, he can definitely accumulate. Which were the other names, Srishti?
He had Tube Investments, Finolex Cables, Godavari Power, and Indian Hotels.
Yeah, I think Indian Hotels is also one stock where I think the investor can obviously accumulate some more quantity either at the current level or maybe at a slight correction. We believe that the next 2 years are going to be very promising for Indian Hotels, considering that the G20 summit is going on. The World Cup happens in October this year, and I think there's a lot of appetite for travel and tourism in the country. So I think Indian Hotels and Mahindra CI, the two companies I think one could accumulate. The other companies I think he can hold on. These stocks have appreciated quite significantly, and at these levels, I wouldn't suggest him to buy or add at these levels. Maybe on a correction, he could definitely look at adding their positions further.
All right, this one is coming in from Kunal Thakkar. He's writing to us from Mumbai, and this one is for you, Kunal. Your namesake is asking a query, and he's actually watching you very closely, attentively, because you did speak about J&K Bank yesterday. I believe it was a part of your chart busters as well. He wants to know what's the target and the time frame. He wants you to confirm that, because I believe he's heard it, but he's not too clear of that.
So I'd mentioned two kind of targets over here. 92 was the short-term target, and by short-term I mean with a time frame of approximately 1 month for J&K Bank. And on the longer-term basis, my sense is that the stock should come back towards 120 mark at least over a time frame of maybe 1 year approximately, which means a decent upside of at least another 30 to 40% for J&K Bank, even from current levels of 86, 87 where the stock is trading.
Okay, but with this, viewers, it's time once again to slip into a short break. But don't go anywhere. We'll be right back just after this quick break.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking your queries. This one is coming in from Sunny, and he wants to know about GE Power. Kunal, 200 shares at a price of around 160 rupees per share. He wants to know about this particular counter. Do you track this by any chance?
Don't track it, but just looking at the charts preliminary, I don't find it very interesting. I think the stock has been beaten out of shape, if I can use that word, for itself over the last 3 years. From I think 970 to 75 in 2019-20, the stock has at one point had fallen to almost 100 odd rupees, and it's now just risen up slightly. But then I think it's meaningless in compared to the kind of correction the stock had seen. Not yet broken past about the longer term moving averages as such. So I don't sense that this could be a good buying candidate. If you're looking at something from the power stocks, then I think NTPC is an exceptionally strong counter at current levels of 215-16 levels. So from a longer term play, that's a much more attractive bet.
Okay, Kunal, the next query is also specifically for you. This one is from Vivek Dutt from Pune, and he's holding 30 shares of Polyplex from a price of 1860 rupees. The stock has been in the downtrend and back to its March low. So at this point in time, is this a good, will this be a good move to average this one?
Well, I don't think so. I think it's a good time where you can look to exit and book losses for Polyplex because what started off from being a short-term downtrend is now resulting into a major downtrend. Even in the weekly charts, the stock has broken below the 200 weekly moving average. That could probably not be positive for the stock over the medium to long term. So I sense that it's a good time where you can look to exit and book out losses.
All right, this next query that I have is actually coming in from Abhijit. He's writing to us from Bangalore. One more coming your way, Kunal. RBL Bank is a counter that he wants to ask a question about. He has 200 shares at a price of 220 rupees per share. With the 1 to 2 year perspective, he wants to know how will the stock do.
Well, I think it's a very good chart, at least on the medium to long term time scale. The last 4 months, we've seen the first phase of rally for RBL Bank from 140 to 225 to 30 odd, where the stock rallied towards. Now the stock is going through a mild corrective phase, but I call it mild with respect to most of the other private sector banking stocks. And I would believe that maybe closer to 200, 205 odd, this correction could settle up for RBL Bank. That could be a point where we look to average further.
Okay, another banking query, and Avinash, this one is on HDFC Bank. Narveer Jadhav from Hyderabad has been holding 100 shares of HDFC Bank from a price of 1650 rupees. He's actually looking to add more 100 shares. So at what price point he can enter? He's looking to stay invested for the next 3 years.
Now, I think even at the current level, Shristi, I think HDFC Bank looks pretty attractive. My sense is that within a range of 1550 to 1595, I think it's a good price to accumulate. My sense is that over the next 2 years, you could see growth coming back again. And with consolidation happening now between HDFC and HDFC Bank, we would be seeing consolidated, financials, possibly from the September quarter onwards, and that definitely is going to drive the valuations going forward. I think overall, if he has a 12 to 18 month kind of time frame, I think he should expect a decent risk reward.
Okay, one more coming your way, Avinash. This one is from Sudeep Sharma. He's writing to us from Kochi. Sarda Cropchem is a counter that he has about 50, at the levels of around 540 rupees per share. What's the way ahead for this? What is a good bet in a specialty chemicals play for the longer term? Do you think Sharda is good? He should stay put with this one, though he's suffering a loss?
Yeah, I think the entire agrochemical sector, Cheryl, has gone through a crisis. A lot of inventory destocking has happened, and that has impacted, Sharda Cropchem. My sense is that, if we can hold on for the next 12 months, because normally most of the agrochemical companies, have a profitable period in the first half of financial year. My sense is that despite the fact that Sharda Cropchem, has a large, export base also in Latin America and Europe, it's better that he keeps a 12 to 15 month horizon. The company has the potential to bounce back. But I think in the very near term, there are no major earnings triggers which could drive the price. So I think keep a time frame of at least 12 to 15 months. And I hope that in the next 12 to 15 odd months, he could definitely expect a decent risk reward.
So that's the fundamental take on agrochemicals. But Kunal, how are you seeing the charts of Bayer Crop Sciences? Gautam has been holding the shares from a price of 4,400 rupees.
Well, you can continue to hold on. The stock is showing signs of a breakout. On the weekly time frame, it's nearing a breakout of the 4,850 mark. I think the stock had retested this levels twice. 48.80, 48.50 was the two respective highs for the stock on the weekly basis. So I believe that it's trying to nudge up higher. Post the breakout, I expect the stock to come back towards 5,000 and 5,200 zones. So that could be a point where you may look to consider maybe booking out short-term profits.
All right. This one is coming from Vivek. Kunal, one more for you. Ace is a counter. Buy price is 300. He's saying he's booked partial profit at a level of around 760 rupees per share. Now he wants to know, should he add onto this particular counter in his portfolio? He wants to know what sort of a price should he look to enter, or what sort of strategy should he adopt for Ace?
See, I think if you've bought at 300 odd rupees and the stock is at 800 and you've booked part profits, then I would believe that you can just hold on to the existing quantity for Ace and not tweak around it, even though the stock has moved up some 30-40 points higher from your profit booking point. In fact, as a trailing stop loss, my sense, so what's happened is in the last, I think 8 or 9 weeks, the stock has not broken below its previous weekly low even once. And in this last 8 to 9 weeks, the stock has rallied from 420 to 800. So a best way to have a trailing stop loss is to keep previous week low as a trailing stop loss. As of now, that lands up to 760, 705 for Ace. So keep that as a trailing stop loss for Ace this week, and for next week, hopefully if the stock doesn't break 765, that could be a point where you may keep a trailing stop loss.
Okay, the next question is from Anjali from Nashik, and Avinash, she's looking out for your take on UPL. This particular count has been hitting fresh 52-week low, so is this a good time to enter this one?
As I mentioned to you, agrochemical has been going through a very painful inventory destocking kind of environment. At least for the next 1 or 2 quarters, I think we could see continuation of some more pain. So I think this may not be the right time to actually chip in into United Phosphorus as of now. I would believe it's better to wait for the September quarter, and after that we could take a fresh review. So I think at these levels, completely avoidable despite the fact that valuations have become attractive. Possibly there could be some more pain for a couple of quarters ahead.
All right, this next one is coming from Anu, writing to us from Gurgaon. This one is for you, Kunal. She has 1,000 shares of Axis at 951 and 1,500 shares of Tata Steel at 119. What should she do for the short term?
I think you should hold both of them. So I'm not extremely bullish on both of these stocks. They are not one of the best performers from their respective sectors, but it's not as if that their charts have been shaken up badly and in this leg of correction. I would still believe that there could be a scope of a decent rally or a pickup of or a recovery on these stocks, say in the next 2 to 3 weeks. So even if it's short term, and by that I would probably expect maybe 3 to 4 weeks, I would expect that these stocks can rally up from where they are currently. So I would suggest a hold.
Okay, Avinash, the next query is on JK Cements. This one is from Krish, and he's holding 100 shares from a price of 3,215 rupees. Currently at a mild loss, so should he continue to hold on for the long term or book losses?
he should hold on. JK Cements, I believe, has corrected mildly, but I think if you look at the cement market, I think a lot of pricing power has started coming back again. We expect a very strong second half of FY24 for most of the cement companies, including JK Cement. So I think keeping a time frame of at least 12 to 18 months, I think he should stay invested here.
All right, this one is coming from Jaya, writing to us from Bangalore. And Kunal, two stocks is what she's thinking to buy. One is REC, the other is Dr. Reddy's. Which one?
So REC is something which you've been recommending as a buy, but I'm not sure that at current levels of 232, it's a good risk reward to enter. Even though I would believe that 250 to 60 could be a near-term upside. The only concern is that what happens in case if the stock goes into a sudden correction, maybe 10-15 rupees odd, that could probably skew your risk reward. So I would suggest to wait out for a correction for REC Limited, not to buy at current levels. But had you been holding on to the stock, then I would have recommended a hold with a trailing stop loss. For Dr. Reddy also, I think the view is very similar. My sense is that most of the pharma stocks which have rallied up significantly high, and I think Dr. Reddy has risen up from 4,400 levels to almost 6,000 plus mark. I think they should get into a phase of a time-wise correction. That's a better zone to buy these stocks. So you have to be a bit patient for both of these stocks to re-enter or enter at lower levels.
Okay, Avinash, the next query is from Imran Alam from Kolkata, and he's writing to us for the first time, and he wants your advice on Campus Footwear. Can he enter at current market price with a one-year investment horizon?
Yeah, I think from a long-term horizon, see, Campus Footwear is one of the leading sports manufacturer of footwear in India. Have a pan-India base, but I think if you look at the IPO price, it's come down even below the IPO price level. And I think this has been largely because of some poor, disappointing numbers for the last couple of quarters. But I think long-term prospects seem to be quite strong. If the investor has a 12 to 15-month horizon, I think this could be a good entry point. But he has to at least keep a time frame of at least 12 to 15 months. We expect better numbers from the second half of FY24 onwards.
All right, this one is coming from Puneet. Kunal, best level to enter ICICI Pru for a period of 2 to 3 months. Puneet is saying, according to him, 510 is the best level.
Well, I doubt that the stock would probably correct towards 510. There could be a possibility, but in fact, currently at 539, 540, where the stock is trading, the indicators are already at an oversold territory, not an extremely oversold territory where it becomes a lucrative contra buy, but I think it's just nearing that. So maybe I would expect another 10 odd rupees correction for the stock, and if it happens immediately, say in the next 1 or 2 days, that could be a point where you may look for a contra buy.
Okay, Avinash, what's your advice on JM Financials? Balaji from Chennai wants to know, can he enter this particular name with a medium-term outlook and at current market price? The stock is already up 14-15% in the past 2 days.
Yeah, I think this is a stock which is largely into the ARC business, and I think has a very small exposure on the domestic kind of business, especially the broking business. So I would suggest that the scale of opportunity for growth is fairly limited. So it's better to hold. I would not try to enter the stock after a 14-15% rise. So I think it's a hold from my side, but no fresh buying is advised.
All right. Another one coming your way, actually, Avinash from Tushar. He's asking about Sundaram Fasteners. Is it a good bet for the long term at current levels? His time horizon is 4 to 5 years. We had Hiren Ved earlier this week, and you can see that also commentary run on the side EV saying that he believes that Sundaram Fasteners is a great manufacturing company, and he's been betting on this for the last 1 decade. But according to you, now is the time you enter if you've already missed the bus?
Yeah, I think Sundaram Fasteners is one of those companies where a lot of wealth creation has happened over the last 5 to 6 years. My sense is the management quality is top class. The products are also well established, and they're not only into fasteners; they're into engine components. I don't think the electric vehicle regulation is going to impact their business significantly in the very near term. So I think somebody who's got the next, say, 18 to 24 months in mind can definitely start an SIP in the stock. Our sense is that we could easily see levels of 1400, 1450 once a strong recovery happens. But I think you need to keep at least a 2-year view time frame, when you consider this kind of stock in your portfolio.
Okay, so that's the take coming in on Sundaram Fasteners. But with this, viewers, let's kickstart taking all your queries in the rapid fire session. And the first question is for you, Kunal. Sanjeev Sinha from Lucknow wants to know, amongst KPIT and CE Infosystems, which one is good for the long term?
KPIT Tech could be much better.
Also, this one's come from Shiva, writing to us from Muscat, DCX India. 160 rupees is the buy price. Should he continue to hold or sell, Avinash?
Yeah, I think she should continue to hold. I think better prospects will happen in the next say 12 to.
Kunal Thomas George from Kochi holding 1,000 shares of Borosil Renewables from a price of 550 rupees. At this point in time, should he average out, book losses, or hold on?
Hold on to the stock only above 500 levels, which would be 200 moving average, is where I would suggest the average.
Okay, this was from Ramesh from Kolkata. He has a lump sum of amount that he wants to invest. Avinash, he wants to know, should he go ahead and put the money in Repco Home Finance or Canfin or both?
No, I think Canfin would be a better bet. I think at these levels, Canfin can give a better risk.
Okay, Kunal, Rima is holding 80 shares of Bajaj Finserv from a price of 1,422 rupees. She says the stock is looking pretty weak. When is this expected to bounce back?
Well, not sure when it's expected to bounce back, but I think you should keep a trailing stop loss of 1450 on your trade.
Kunal, Gopinath R from Mysore has written about Infosys. He has the shares at a price of 1,108 rupees per share. Should he book profits now?
I think you should hold on.
Okay, Kunal, one more for you. Harvinder Arora bought 10 shares of Bajaj Finance from a price of 5,975 rupees. Can he continue to hold on or sell? Bought for the short term.
Hold and keep a trailing stop loss of 6,600 on closing basis.
All right. Sudeep wants to know what's the outlook on Colte Patil. How is the stock looking to you, Avinash?
Yeah, I think he should hold on. Better prospects expected in the next 12 to 15 months.
Okay, Avinash Sri from Cochin holding 100 shares of DLF from a price of 495 rupees. Is that a hold or exit this particular name?
I think he should hold on. Keep a time frame of at least 12 to 18 months from now on.
Okay, Vipul from Mumbai, Kunal, Birla Soft, 250 shares at a price of 340 odd rupees. Should he book profits or kind of hold on to this for one more year?
Book profits and look to buy back closer to 400-420 range.
Okay, but with this, viewers, it's time's up in this edition of Buy Now Sell Now. Thank you so much, Kulan and Avinash, for joining us today and helping all our viewers with their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put this show together. Looking at the market, Cheryl, 19,300 is what we are back again with.
Yes, mild bit of recovery coming in, but with that, we are totally out of time on this edition of Buy Now Sell Now. Markets at noon coming up next with Vinny and Somit.